actually wanted us to do this early in the morning, but unfortunately we couldn't, and of course that's because the reactions were very minimal. Okay, so now we're standing. Let's do one or two things. Okay, so can everyone confirm if you can hear me once again?
Yes, sir, I can hear you.
All right. Okay, so as we move on, in case you have a question, feel free to ask your question. All right, for this particular trade, this is more like a continuation trade. As you can see, the initial entry is actually here. All right, the initial entry is here. All right, so this is more like a continuation setup, and let me explain a few things to us. So one of the things I would really love to achieve on this call is to give you at least an understanding of how you can get to know the trend. All right, so in order to do that, we'll first of all have to go to the higher time frame. Always stick to the higher time frame. The higher time frame is far way superior to the lower time frame. And of course, on gold you can see that everything is all-time high, all-time high, all-time high. So you might ask, okay, where do I take my setups? Okay, so in cases like this, we know that we're bullish, right, because it's all-time high. So you need a framework. Where will price come from? All right, so for example, we already know where price is going to. All right, price is going to the upside majorly, so any retracement down is just a pullback. All right, and of course this is a potential high that price might want to come and take out. So but you need to ask yourself the question, how do we get there? How do we get there? All right, so you ask yourself the question, how do we get there? And this is what I want to share with you briefly. Now, there are many ways that I identify my trend. There are many ways. I don't just use support and resistance. I don't just use smart money concept. I don't just use ICT concept. All right, I kind of fused everything together, and of course that's what I call the 3P system. Okay, so it's my system that I was able to generate, and I think it's a very nice system. So I will just share a few things with you that you can actually learn from in this particular live session. All right, meanwhile, in case I decide to upload this to YouTube, don't hesitate to watch it again, and don't forget to like and leave a comment section below. Leave a comment in the comment section below. All right, so let's start from the low. Now you see, you need to start from the lowest point if you are bullish. Like when I mean lowest point, I mean a valid range, right? A valid range. And what exactly makes up a valid range? So this is what makes up a valid range. For example, we have price pushing down, so I'm going to use a bullish example so that we can understand this. So we had a break, we have this. All right, and this high is confirmed by taking liquidity. So when this happened, we now have a valid range. Okay, so this is it. We had an initial break here, but this is not confirmed yet. We don't know if if this low is a strong one or not until this high is taken. So it was after this high was taken that we now know that, okay, that this low is now a strong low. All right, we now know that this is a strong low. Do you understand? Because when price breaks this low, right, price can retrace and continue. The same thing that will happen here could replace and contrast and continue. But if it did not and breaks this high, this is not also a guarantee that it wants to go up. All right, it's one of the ideas, but that's not guaranteed, because this high can just be a simple inducement that wants to be taken for price to continue here and continue to the downside. So how do you identify this? First thing, you need to understand ranges. All right, and the first range, or the first thing you need to understand about range is first swing points, fair value gaps, inducements. All right, because usually when price is breaking a high, it tends to break it with full momentum. All right, so it breaks with full momentum, therefore we have internal range. This is internal liquidity. Now inside this, we could have a fair value gap on here, right? And of course we could have here. Now this is an external range, and once liquidity is taken out, what else? What next? Price will either continue trend, consolidate, or reverse. Right, it will do those three things: we break out, retest, or continue, or it will reject and trade and reverse, or it will consolidate. Do you understand? So once we have that on, it's going to play an important role in how we check or how we view the market. All right, so I want to assume that everyone can still hear me clearly. Okay, so now on this particular day, as you can see, is the same thing which I just explained. All right, we had a break here. Of course, we had a break on here, we had a break on here. Okay, we had a break, and this becomes what? Internal range liquidity. Right, so look at what I was explaining earlier. This is what I was explaining earlier. When price break, there's definitely going to be a little inducement, fair value gaps, right, which is one of the PD arrays. And why is that important? It is very important because it shows the strength. It shows, look at the strength of the candles that broke structure. Right, it shows the strength, so we have that on. Now, how do you now incorporate this with SNR, with your support and resistance? Of course, when we have a fair value gap, we'll definitely have a key level, SNR key levels, right? Either a V-shaped key level, which happens to be this, right, or an ROBS, which is resistance break support. So we now have something like this. So price push up like this, right? This is exactly what we have, right? So we have this as, let me take this out. So by implication, what do we have? We have this. We have this that was a resistance, now turn support. So what's our expectation? Could expect that price come and continue like this. Do you understand? Or price can decide to break that, continue like this, or break this, continue like this, or break this and continue like this, which we call the QM. QM is it's very simple. It's called Quasimodo, right? But the short form of it is what is called QM. Right, so it's very, very important. Once you are able to frame that, then you know exactly what to do next. All right, so after you've identified your trend, what else? Of course, you need to draw your key levels, and this is where you need to learn some of the entry models, right? They are very, very important. So you can go to a time frame lower, like in this case you can go to 1 hour time frame, because you are coming from the 4-hour level, right? So on this end, what do you do now? Of course, we have what is called a confirmation candle here. So this could potentially be where you want to take your trade, and of course the safe stop loss would have been here, but this is actually very big. All right, this is too big. So what you do, you can just use either experience, head knowledge, or your plan. to frame your setup. Now this particular one, that was exactly how I was able to do this. So this particular one was coming from, there's what I call the Pip decisional levels. This is a point whereby a key level breaks another key level. Okay, when that happens, then I will have this as my decisional level. Now these are very powerful, and of course this is just a surface level information that I'm giving you, but if you are diligent, you will be able to make the markets from this understanding. Of course there are other things that you must as well understand. For example, you can see we had a little bit of fair value gap on there, right? We have a little bit of fair value gap there. Why is that? Because it's responsible for a structural break. All right, so this might not be the regular traditional structural break, but believe me, these are very strong levels if you have understanding. So it's the same thing that happened here. We had a break here, right? And what was supposed to be our expectations? Our expectation is that price will come and do what? And trade from here to the upside. But remember, we said something that price will either break trend, that's if it breaks it will trend, or break reverse, or reject reverse, or what? Price will consolidate. So any of these three things must definitely happen. But the question now is, how do I know the one that will happen? Well, you may not really know 100% the one that will happen, and this is why you need an edge. All right, this is why you need an edge, because your edge will actually give you exactly what to do. It will tell you what to do, how to go about it. All right, that's what an edge can do for you. Okay, so because of time, first thing I want to establish here is your ability to identify the trend. So for example, this is another scenario. So we'll go back to the 4-hour time frame. So on the 4-hour time frame, like I said, you need to stick to the higher time frames, because they will reduce the noise, they will reduce noises and make you to make well-informed decisions. Okay, so of course there are different things here I could show you, but I wouldn't want to confuse you with a lot of information here. So simply put, we had a break here, and of course after a break, what are we expecting? We're expecting either a trend, right? A trend, or we're expecting a consolidation, or we're expecting a reversal, right? So once you have that in mind, that's your first deliverance. That's your first deliverance. All right, so of course this break was a flip engulfing. So what do I mean by flip engulfing? We have an engulfing leg here. All right, we have an engulfing leg here, and of course this supposed to hold price and sell to the downside, but what happened? It failed to hold price and broke structure. So when that happened, a new engulfing was formed here, isn't it? It was formed here, so which means that okay, price might be willing to continue and go to the upside. All right, now there are other things that you need to consider. This is not just about engulfing or about swing points, swing levels, as it were. Remember the first scenario that I showed you, I kind of told you about understanding ranges, right? You need to have an understanding of the range. So once you have an understanding of the range, that's one of the first deliverance that you could actually have. Okay, so aside from that, you also need to understand, of course, you don't want to joke with key levels, right? Key levels are very, very powerful. So for example, this is a key level. Now this is a key level, this is a key level. On there we have a key level here, and we have another level here. This is a key level, what I'm showing you, right? It's a key level. So what are you expecting? Price now you already have an idea of where price wants to go to, right? So we have a rejection from that particular key level, which is on the higher time frame. So if we go to the time frame lower, what do you see? Of course, this was a trade that would have delivered something to you, this one. Then probably wait patiently. As you can see, that was how this trade was framed. And like I said, this trade that is ongoing, it's a continuation setup. So this is why you need to understand what you are doing, so that you know where to enter and what to wait for, literally. All right, so if we go to 15 minutes, so let's go to the 15-minute time frame, because this setup was based on the 15 minutes. And why is that? Because it's not just from just ordinary 15 minutes, it's from what, from the higher time frame. So that's exactly how we got to have this on. And of course, price is pushing. Hopefully I want price to get here and get here to our final level. And of course, if it gives more, is best. So at this point, this trade is actually risk free. This particular one is risk free based on the timing, based on where time is now and where price is currently now. I wouldn't want price to come to this zone, right? If price comes here, then the whole setup, it might likely just fail, right? And that's how you need to have an understanding. All right, and of course, this is exactly what I teach in the mentorship. I literally show them step by step on what to do. All right, and like I said, this is the first week of October. I'm working on my new system. It's called the 3P system, and basically it's very, very powerful. So you need to first of all plan your trade. You need to, there are a lot of things that you need to consider. So if you did not learn anything from this video, one thing that you should go with is, first, you need to learn to frame your trend, frame your direction, because you don't have a setup if you don't have any direction. All right, so I love the pump. I love what's happening on charts right now. So this is a very nice setup. And of course, guys, I do this in and out, and of course I send setups to you guys literally every day on the Telegram channel. And of course, if you are in my VIP, I love you guys. Okay, so of course, it's not that I'm trying to sell you anything, but even if I want to, it's worth it, right? It's worth your resources, believe me when I say so. All right, so thank you so much. Do you guys have any questions so far on this? I think we're done, but in case you have some questions, kindly let me know.